Get ready for cargo shots from the Strat Times, presented by Hactl. Here's a weekly roundup of the latest air freight and logistics news.
FedEx unveils plan for freight unit separation. How much cargo will Air New Zealand move this holiday season? And Cathay Drone has obtained UAE's first commercial BVLOS license. Stay tuned with us as we discuss the top interesting stories of this week. I am Nikita Sebastian and you are watching Cargo Shots presented by Hactl. FedEx announces freight unit separation, posts 18% drop in Q2 operating income. FedEx has announced plans to separate its FedEx Freight business into a new publicly traded company within the next 18 months. This move aims to unlock value for the freight business and position FedEx for greater growth. The separation is expected to be achieved in a tax-efficient manner for FedEx stockholders. Once separated, both FedEx and FedEx Freight will continue to pursue their growth strategies as industry-leading public companies. In its Q2 earnings report, FedEx posted an 18% decline in operating income to $1.05 billion, citing lower than expected FedEx Freight revenue and sustained weakness in US industrial production. Despite this, the company's efforts to transform its operations are showing progress. Challenge Group closer to taking possession of Jet Airways B777s. Jet Airways' liquidation process has begun nearly 6 years after the airline ceased operations in April 2019. This development has opened up opportunities for Ace Aviation, a Malta-based subsidiary of the Challenge Group, to acquire 3 grounded Boeing 777 aircraft. The company had bid for these aircraft in 2022, planning to convert them into dedicated freighters. Despite paying a $5.6 million deposit and signing a letter of intent, the acquisition was blocked. With the liquidation process underway, Ace Aviation is hopeful of completing the acquisition soon. However, the company faces technical hurdles as the aircraft requires significant maintenance to become airworthy, with estimated costs ranging from $10 million to $15 million per engine. Air New Zealand to move 5,000 tons of cargo through December-January. Air New Zealand Cargo is gearing up to transport a record 5,000 tons of cargo through December and January, with a significant portion destined for Christmas dinner tables worldwide. The airline will move large volumes of fresh produce, including premium lamb, cherries, and seafood, to key export markets. Cherries are in high demand in Asia during the Chinese New Year period, and the airline aims to transport up to 1,000 tons to markets like Taipei, Shanghai, and Hong Kong. Air New Zealand Cargo's efforts will support Kiwi exporters and contribute to New Zealand's economy. The airline's general manager Cargo, Anne Dunn, said they are proud to play a part in delivering New Zealand's finest exports to the world. SkyCell invests millions in Validate, becomes major shareholder. SkyCell, a provider of pharma supply chain solutions, has made a multi-million-dollar investment in Validate, a Netherlands-based digital platform for pharma lane risk management. The investment strengthens Validate's position in lane risk assessment and ensures its independence as a trusted platform, serving over 1,600 companies globally. Validate will continue to operate neutrally, providing a benchmark for healthcare shipments through its pharma index. The partnership will enhance Validate's capabilities, including faster lane approvals, advanced risk modeling, and emissions reporting. SkyCell CEO Richard Hactl stated that the investment will drive innovation and sustainability in the supply chain, meeting the evolving needs of the industry. The two companies had previously announced a partnership in July 2024. Cathay Cargo reports 15% November volume surge, names Siddhant Iyer to lead global partnerships. Cathay Pacific's cargo business saw a 15% year-on-year increase in tonnage to almost 143,000 tons in November 2024. Cargo revenue ton kilometers rose 11.9% year-on-year, while the cargo load factor increased by 1.2 percentage points to 62.3%. The airline attributed the growth to healthy market momentum during the peak season, driven by e-commerce sales events. Lavinia Lau, Chief Customer and Commercial Officer, said the airline expects a strong second-half financial result driven by elevated cargo demand and reduced fuel prices. Meanwhile, Siddhant Iyer has been appointed Head of Cargo Global Partnerships, succeeding Chris Bowden, who is moving to Hong Kong Aircraft Engineering Company in March 2025. Cathay Drone makes history with UAE's first commercial BVLOS license. Cathay drone has made history by securing the UAE's first commercial license for beyond visual line of sight drone deliveries. Issued by the Dubai Civil Aviation Authority, the license marks a significant milestone in the region's drone logistics industry. Cathay Drone unveiled 4 operational drone delivery routes at Dubai Silicon Oasis, connecting key locations and enabling fast delivery of essential items. The company has completed over 400,000 deliveries in China and is poised to revolutionize urban logistics in the Middle East. The license is a testament to Cathay Drone's commitment to operational excellence, safety protocols, and service quality, solidifying its reputation as a pioneer in the global drone delivery ecosystem. As we wrap up 2024, we thank our viewers, partners, customers, and the industry for an incredible year. It's been a memorable year marked by exciting milestones, including welcoming Hactl as our presenting partner. Wishing you and your family a happy new year. We will see you next week with more news from the world of air cargo.
You've been watching Cargo Shots from the Strat Times, presented by Hactl. See you next week with more updates from the air cargo and logistics industry.